All right, let's call the Board of Trustees meeting for Thursday, not December 5th. That's what it says on my agenda. Today is March 6th meeting to order. Clerk, please call the roll. No clerk, we can call the roll.
I can do that for you.
Okay, go ahead, please.
Chairperson Chernoff?
Here.
Secretary Williams?
Here.
Trustee Geller is not here as of yet. Trustee Hipson?
Yes, present.
Do you have a quorum?
We would like to welcome Ms. Hipson to our board. We hope she will be a vital part of it, and we understand that she already has done her homework, so thank you. We needed an approval for the minutes.
Motion to approve the minutes.
I second.
All those in favor? Aye. Motion passes. New business. Oh, I'm sorry, also present. Jeremy? Brett, I'm sorry, Brett.
Kadacic, that's Jim.
Brett Chudachik?
Kadacic.
Kajakic.
Kadacic, almost.
Kadak, okay.
A decade later, I've been working with my I still can't say it either.
Just Brent.
And Jeremy, thank you for being here.
Dashik.
All right, new business. You got it? Okay. All right, ratification of invoices.
Mr.
Yes.
Is there any chance you're on the minutes?
Yeah, I probably am. Hold on.
Okay.
I'm going the wrong. Where is the,
In the agenda page,
hold on, where is it?
it wasn't included.
It wasn't included?
In
The
that
invoice?
No, but it.
Oh, okay, thank you. Okay, review approval of the 2024 actuarial valuation.
Correct. And I'm gonna get your actuary, Chuck Carr, on the phone here, and he's gonna go through that report with you all.
No, I know, Chuck.
I bet you do. Hey Chuck, good morning. I'm here with the North Miami Beach Board, and they are ready for you to take them through their valuation report.
All right. Well, good morning, everybody.
Good morning.
Good morning.
I assume you guys have a copy of the October 124 actuarial report in front of you. You don't necessarily have to follow along, but I'll point you to a couple of the relevant pages when we get there. I'll start out with this valuation is as of, it was done as of October 124. So obviously it doesn't reflect anything that's happened with assets or otherwise since that date. And
That's good.
Hello?
That's good.
Oh, yes. Yeah, you're right. Yeah, a lot of volatility of late. Anyway, so, yeah, a lot's happened. We're, 5+ months into the current fiscal year. So, anyway, this report is used to determine the contribution requirement from the city, not for the current year, but for the next following fiscal year. So, this report determines the required contribution for the 25-26 fiscal year.
Okay.
And the current year contribution requirement, which we'll talk about in a minute, was based on the October 123 valuation report. For the record, there were no plan changes reflected here. Just as a reminder, last year's report did reflect the bump up in benefits, or I guess we call it the restoration of benefits to the one actively employed participant who was hired prior to February 1st of 2013. So this report likewise reflects it, but it was first reflected in last year's valuation. Also, just to touch on assumptions, there are no assumption changes here for this report, so all the assumptions are the same as we made last year.
Here, give Stacy this.
Yeah, is there a question?
No,
No, we're just trying to get you louder.
Sorry, it's hard because I can't tell if anybody's saying anything because of the way these phones work.
No, we hear you clearly
You're
now.
good now, Chuck.
Okay, good. All right. So just as a reminder, again, we are still using the 7.25% interest rate assumption. I think the board changed that back in 21, if I remember right. So everything is the same as far as assumptions go. I'm going to skip the data part of the report. There wasn't anything too exciting in that part. I want to go right to the assets. So if you'll turn to table 2B, as in boy, this is the market value of assets. It's page Roman numeral 2-2. In my report, I don't know if you guys have the pages renumbered. Sometimes for some of the meetings, the meeting packets will have the pages will be renumbered.
I think they're there, Chuck.
Yeah, we're
Okay.
there.
So our market value as of 10/1/24 was $22.17 million. What I want to point out, though, is we have an employer contribution receivable of $388,500. That was the remaining contribution that was due for last year, and I'll touch on that some more in just a minute. And so it had not been made as of the date of this report, to my knowledge. So anyway, that's a receivable. I had to add that in, and like I said, in just another minute or so, we'll talk about that a little bit more. Our return on assets, if you want to turn one page to Table 2C, you'll see a 10-year history there at the bottom of your returns, both on market value. That thing called actuarial value is sometimes it's the same as market, sometimes it's a little bit different. It just depends on whether we have an advanced employer contribution or not. At the moment, as of 10/1/24, we do not. So it's pretty much the actual value is the same, at least at that point in time, is the same as market value. Over time, though, for the 10 years on market, we've averaged just a little above 8%, which is great. Obviously, that last year's return of 21% really helped to boost that up. Our assumed return for the same period was 7.3. So over the last 10 years, we have beat by about 0.75% or better. We have beat our assumed return on average. Let's go all the way back up to table. Let me see. Let's go to table 1A, which is minimum required contribution. This would be table Roman numeral 1-1 in the report. So let me start. Before I get to this year's contribution requirement, let's talk about last year last year, this year, and then we'll talk about next year's contribution requirement. So last year's contribution requirement was actually over $400,000. The city did have an advanced contribution credit going into last year, and this is, again, for the 23-24 fiscal year. I believe it was about $93,000. But the city did not make any deposits, at least not that I'm aware of, for last year. So I reduced the required contribution for last year by that advanced contribution credit, but that left a balance due of $388,500. I did put a paragraph in the cover letter if you want to kind of read about it a little bit more. But basically, the state requires the city to pay interest on the past due contribution for last year up to the date of deposit. So in the cover letter, I actually, and I'll give you what the number is that I calculated. If the city deposits that amount for last year, the remaining amount for last year, on April 1st of this year, then the deposit amount would be $431,506, which includes the $388,500 of the contribution shortfall plus $43,006 in interest. That interest, by the way, is calculated and has to be calculated at the 7.25% valuation interest rate, and it is calculated starting October 2nd. The contribution was actually due October 1st of 23. And, we don't usually worry about it if the contribution comes in during the year or...
Chuck, can you hold 1 second?
Yeah.
Yeah, we have a question.
Yes.
From January 1st, will that interest go up to 9% or no? Of this year?
No. I calculate that interest assuming that the city makes this deposit on April 1st.
Okay.
So it includes interest up to April 1st.
Okay.
Yeah.
I just didn't know if
Okay.
it's going to be at the new rate at 9.09 or whatever that is. Okay.
I don't know what the 9.09 is. I'm not
Okay.
familiar with it.
Okay.
Are you talking about
No, we're
I'm
good.
not sure what that is.
What is the 9% you referenced?
I thought in Florida it was increasing, but I could be wrong. On January 1st, but okay.
I never heard. I didn't hear that.
Okay.
But you may have. All right, go ahead, Chuck.
I'm not aware that the state that I'm not aware of that.
Okay.
I mean, we'd have to ask, I guess, the attorney somebody if they are aware of anything like that. I'm not aware of any requirement that we charge, 9% plus starting January 1 on a past due contribution. As
Okay.
far as I know, the rule is still the valuation interest rate, which is 7.25%.
Okay. Great.
But anyway, that's to my knowledge, that's the situation. So we're going to talk about 3 different years when we talk about contributions this morning. So first of all, for last fiscal year, the remaining deposit with interest is $431,506, assuming that deposit is made on April 1st or around April 1st. I'm not going to quibble with whether it's a couple days before or after. But anyway, so that's that. Now, the current plan year also has a contribution requirement. This would have been based on the 23 actual report. Our current fiscal year requirement, which of course is not past due at this point, because we're still in the middle of this year, but it is $415,283. So I just want to point that out to make sure that the city and everybody understands that there's the $400,000 plus of past due contribution with interest. Then we've got another $415,283 that's due for this year that does not reflect any extra interest charges. But obviously that will happen if we go after the close of this year. And then on table 1A, you'll see for 25-26, the contribution requirement drops dramatically to $62,309. I suspect, assuming things continue to go well, I suspect that maybe after next year we'll be back to a situation where we're going to zero employer contribution. But I can't guarantee that, and it is entirely dependent primarily on how the investments do. We sort of live or die with these plans at this point, especially a frozen plan like this one. The demographics don't usually impact things too much from year to year. It's almost always the investments that are driving the bus. So, whether the city has a contribution requirement beyond the 25-26 fiscal year and how much that would be is going to depend pretty much on, what the asset performance is. But, for the 26-27 year, it'll depend on asset performance between now and the end of this coming September, because that'll be based on the 25 actuarial valuation. So that's the 3 different years of deposit requirements. The other thing I was going to point out, just for your information, so if you look at table 1-E, this is our present value of accrued benefits.
But I have a question, Chuck. Chuck,
Yes.
I have a question.
Yes, sir.
The city contribution part, our plan is not gaining people, it's losing people. So shouldn't that be a non-entity now?
Well, it depends. And that gets to what I was just talking about with the investment returns. So with the contribution requirement prior to, for valuations before this one, we had, the year, I think it was 21-22, when we actually had a negative return that brought back, I think we did have a year when the contribution had dropped to 0, but then we did have a restoration of benefits to that one individual. That wasn't a particularly big deal. It only added, I think it was like $160,000, maybe $200,000 of projected liability, which in the big scheme of things is not that much. But it's really that asset performance that has, and the contribution requirement is sort of in arrears. In other words, because of that 1-year delay in the application of the valuation results, so you're not seeing the reduction due to the good investment performance last year, for example. You won't see that till the 25-26
Till next year, right?
Contribution requirement.
Okay, thank you.
Yes, sir. So if you look at the bottom of table 1E, you'll see on an accrued benefit basis, we're just over 100% funded. So the contributions are now, that 100% reflects the past due contributions. I've included the past due contributions as an asset. So if I had not included that as an asset, we wouldn't be 100.16% funded. But assuming the city makes the contributions that are required, we are just over 100% funded on the accrued benefit basis. So that's why I said the expectation is within another year and a half, the contribution requirement should disappear unless we have, adverse experience with the investment returns again. And that's because we're funding, our funding right now after this year is really for this one participant who's there's 4 participants who are still accruing benefits, but the one in particular who had his benefits restored. So we're funding for that. That's sort of that last little piece that we're funding for. Those individuals are, I think, at least 3 of the 4 of them, I think, are eligible to retire right now, or at least they're all very, very close to being able to retire. So anyway, the funding that we have is up through this year is really to cover what's happened in the past, and then the extra contribution next year is really for the last little bit of benefit accruals that we expect for the 4 actively working folks, as well as we have an administrative expense load that is also part of the funding requirement of the plan. But like I said before, my expectation, if things go as planned, is that beyond next year, I believe our contribution should go back to 0, or at least be something very, very low. We should, this current year should be the last year that we see, the multiple hundreds of thousands of dollars of contribution requirement. But I want to caution everybody to make sure we're all on the same page. If we have another year when we have an asset loss, or we fall way below our assumed return, then it is very possible that we could see a contribution requirement again. Because even if you have a plan that's frozen, even if you have a plan that consists only of retirees, the city ultimately is still the entity that is responsible for making sure that plan is funded.
Making it good.
So I'm sorry, go ahead.
No, I'm agreeing with you.
Okay, so even in that situation, you could have a plan that's 100% funded or overfunded that's just retirees. But if you have an investment year that's bad enough, then in that case, the city could end up having to make another contribution. So the only time that we can say that the game is truly over is when our last retiree has passed away and we've paid all the benefits out of the plan that we're, we have no more participants to receive benefits. So until then, the city is always sort of going to be at risk to some degree of having to make a contribution again. But the expectation is that in another year or so, we should be done with contributions to this plan.
Now let me ask you a question.
Yes, sir.
When the plan is totally done, there should be a 0 balance, right?
Well, likely when the plan is totally done, there will be a positive balance of assets, because if there was a 0 balance, I mean, we're not going to be able to nail it right down to because we don't know when that last person will pass away.
How long they'll,
So
right.
we'll have to have assets in reserve to pay their benefit, for whatever their remaining life expectancy is. Once they pass away, though, there's likely to be some residual assets in the plan. And at that point, my understanding is the assets would revert back to the city. If you were a private sector plan, that would not be true, but most of the assets would be subject to a 90% excise tax. But you're not covered by that rule. You don't have to worry about that. For public sector funds, once the last participant has been paid out and we have no more beneficiaries of the trust, then the trust would be dissolved and any balance in the trust would revert back to the city. At least that's my understanding.
Okay. Thank you.
Mm-hmm.
Yes, sir. All right. Any other questions about the valuation? I know you guys are probably hoping it'd be a little bit better, but I guess to end on a positive note is I think things will get better from a contribution standpoint in the very near future.
Well, thank you, Noah. We appreciate your optimism.
I try to be optimistic. Well, I don't know if there's no requirement for you to do that at this morning's meeting, but this report technically is a draft until such time as the pension board officially or formally accepts it. Then and only then does it become essentially the invoice to the city for the requisite contribution amount. So I don't know if you guys are inclined to do that at today's meeting, but if you are, I guess a motion will be in order to accept the actuarial valuation as presented.
Do we want to?
Unless you think there's an issue.
Accept it.
Yeah.
Motion, is there a motion?
It would be appropriate.
One of you two?
I make a motion to accept the actualization.
Motion to second.
All those in favor?
Aye.
Aye. Motion carries.
All right. Thank you very much for that. So now that you've officially accepted it, we have 60 days to get this filed with the State Division of Retirement. We do that electronically, and Lisa in my office usually takes care of that within a few days of approval. There is one last housekeeping item before I conclude my report. And Jeremy, I don't know if you or the attorney wants to give them the motion, but you have to, there's a separate requirement that the state has that requires the board to approve that 7.25% interest assumption that was a part of the valuation you just approved. The 7.25% has to be separately approved. It's just a housekeeping thing. But anyway, Jeremy, can you or the attorney give them the motion for that if they're inclined to do that?
You know, the current.
I can do it. Although Chuck, you said you got it right the other day, but I'll do it for you.
Yeah, that's Jeremy was not at a meeting the other day. He wasn't able to make it, and I was able to actually get it out. But I never feel like I get it right.
Yeah, so as Chuck alluded to, this is just, you're essentially just restating that 7.25% assumed rate.
Correct.
You're not changing anything. This is just kind of a busy work item. So the motion is to approve or set your expected rate of return at 7.25% for the next year, the next several years, and a long term thereafter.
Second.
No, he can't make it.
Motion to approve, motion to
So
approve
moved.
7.25% presumed return.
I'd second it.
All those in favor?
Aye.
Aye.
All right. Well, thank you very much. That
Thank
concludes
you,
my
Chuck.
report, and with your permission, I will leave the meeting.
Thanks, Chuck.
Okay. Thank you, guys. Hope you have a good rest of your week. Bye-bye.
Okay, no, we did the all right.
Right.
Ratification of invoice of payments. Everybody have a chance to look at the invoices?
I have.
Any questions?
I do not have any questions.
Me neither.
All right. Move to-
Motion to approve the invoice payments as stated.
I second the motion.
All those in favor?
Aye.
Bills are paid. Ratification of retirement and lump sum payments.
You do have one, Jerry Smith has moved into retirement and got his first payment 5 days ago, $1,900.
Nice. Nice.
So certainly you want to approve that unless you had any issues or questions.
Motion to ratify the retirement lump sum payments of Jerry, you said Smith?
Smith.
That's a good
Jerry
name.
Smith.
I second.
All those in favor?
Aye.
Aye. Passes. Quarterly investment returns, December 31st, 2024.
Okay. I didn't want to pop Chuck's balloon. He's a little more optimistic than
Yeah.
we probably are. Just unfortunately, as of the last couple of weeks, I'll go over the dollar amounts for your December quarter first. You started the quarter with 21.7 million. You had 10,000 in contributions come in. Earnings, we did see a market sell-off, as we've kind of already discussed a little bit. The down 417,000. You had 437,000 in distributions paid out, 13,000 in change in expenses. So your ending balance for the quarter was $20,919,629.54.
I missed the footnote about tariffs. Is that?
Because that wasn't an issue in the December quarter. That was a different issue. And I'll touch on that momentarily. Just any dollar or accounting related questions before I do
No.
the investments.
I do
Fine.
not.
No, okay.
Greg, anything?
No, not at all.
Okay. If you do want to take a look just at the numbers that I'll reference here, page 74.
I just have one question. We're going to keep the international equity at 21%?
Yes, currently we have no target allocation changes, no strategy changes. Obviously, we're relying, especially over the last few months, the December quarter, and certainly over the last couple of weeks, we're relying heavily on our individual portfolio managers to make wise stock selections.
Right,
But
'cause
from a
most of the cities, it's around 11 to 15. That's what I was wondering, yeah.
no, currently that's not going to change. I will tell you, although I don't believe 21%, I don't believe it's at 21%.
It's
It's showing 21.
Unless it just got skewed for the quarter. So this is quarter end. We rebalance at the end of every month. So let me
For
go back. You are correct. So that would just be, it's gotten a little off its target. And so that would have been rebalanced back at the end of
yeah, no,
December.
it's a little. That's fairly aggressive for a city. Yeah.
That's a little high, although we do have a slightly higher international allocation. I want to say you're in the 70% equity. I want to say it's maybe 18, 19% is the target. That was actually changed. That was a strategy change that was made, give or take 2 years or so ago. Essentially, we have an advisory committee that works with an investment consultant over this fund. The conclusion they came to when they did make that change is that given the run up and excellent performance of your U.S. large cap, that essentially they felt that it had kind of reached maybe a little higher limit, didn't have as much room to continue to grow as the international market, where the pricing was much better, even though it was experiencing very good gains as well over the prior handful of years. They felt like there was some more opportunity there. So not only is there more opportunity in the international market, but if you've kind of hit where you think you're getting really close to as far as a stock price can go, you're also actually taking on more volatility by staying in that space too. So you don't necessarily see as much opportunity, but also if you're at that higher price point, you would expect there could be more fluctuation in pricing. And so that was the reason that change was made. It was, don't quote me on this, maybe about a 3% allocation change where we took 3% out of our target from the large cap and moved it into the international.
And I only ask because I know at the state, we were prohibited from going that high in international. I mean.
Oh, okay.
But I guess that leads me to my other question, since this is my first meeting.
Sure.
And perhaps Brent can answer this. Do I need to get certified or go through a course as a fiduciary or anything?
You don't have to. You will have to file a Form 1, which, unless you came from a board that you already had to file a Form 1.
Not currently.
Okay, so you will need to file Form 1 within the next 30 days.
And be sworn in, right?
I mean, I'm not sure what the city's policy is
No?
swearing, and I think she's good to
They
go.
have one, but I don't know.
But as regards to education, you are expected as a trustee to get education. That doesn't mean you have to formally go to like something like the FPPTA or something like that.
It
But
was required in my other.
okay, yeah, some boards require you to go to a school or something like that. You certainly
The
can.
board would have to require me.
Yeah, or they could authorize. You could come to the board and request going to the FPPTA or something
So
like
far,
that.
no one on the board has that, then.
No one
I
on
don't
the
believe
board.
we have anybody with any certifications on this.
No CPPT or anything like that. No, but you're certainly well within your right, obviously, to request the board to authorize you to go, or anything like that. But the most important thing is getting the Form 1 filed, obviously. With the
I just see as a best practice when we're responsible for, 20+ million here.
Yeah.
Kind of a risk reduction.
Yeah, no. I mean, look, like I said, I'm all for boards encouraging for trustees to go to schools or educational things. Just some do, some don't. Some it's a monetary thing, and others they do. So.
Or we just push all risk to you. That's fine too.
Yeah, well, I mean, and you do get some education obviously by attending the meetings and things like that, and through your profession, but
Or you could go to sleep, but
Yeah. As long as it's not, so far, only the Form 1 is the only thing required of me.
correct. We don't have a board, right? We don't have a board policy that says Stacy has to go get certified to the FPPTA or something like that.
We did in Davie. Certainly for our
Oh.
financial director, for Bill,
Sorry, for the board. The board did not have to. The pension board.
correct.
Yeah.
But he did, yeah. Okay.
Jeremy, a question on the foreign again.
Okay.
Based on the climate out there right now, how reactive are we to that?
We're not. Again, there's two different levels. There's the strategy level, overriding investment policy. That we're not reacting to. That again then goes back to what I said before, where this is where we rely on our managers to make good stock selections. And so we expect that they're absolutely monitoring this more closely and making any decisions that they see necessary. But from a strategy, everything we do, and I know this is the most boring statement in the world, and I hate saying it, but it's just true. So I have to repeat it because I get questions like this all the time, especially in a volatile market like we're in right now. The strategy is built, and this should be any pension plan. I would hope that any pension plan would give you a similar response. The strategies are built with very long-term horizons in mind. The absolute shortest would be 5+ years. If you're going to make a strategic decision, a strategic change, you should be doing it with the mindset that at least over the next 5 years or so, this makes sense. If you're looking at the next few months, even really next year or two, and you're making strategic decisions based on that, I would question how sound that is. So right now, there's nothing happening that we think is, okay, the market's now going to look very different over the next handful of years, and we need to adjust accordingly. We would see this as market cycles. Markets go up, markets go down. What you never know is what's going to cause the market to go down. If you look back over time, it's almost impossible. You can't predict COVID was going to happen. 6 months ago, 3 months ago, even when Trump was elected, he certainly had talked about tariffs all along, but we didn't know what they were going to look like. You don't have this crystal ball. If you did, you wouldn't have down markets because you could adjust, right? The financial crisis, 08, 09.
Right.
Couldn't. So therefore, our decisions are not made, they're made to absorb and go through these down markets, taking the least possible pain we can, right? We want to capture the most we can of the upside and the least we can of the downside, but you do that trying to strike a balance. And so that's, again, I know it's a boring answer, but it's really the only answer.
Thank you.
But just to kind of touch on what did hurt the market in the December quarter was actually more that inflation was staying higher longer than expected. Again, a topic we've talked about ad nauseum. Labor market was continuing to be strong. GDP was strong. And so the Fed, even though we had our 3 rate cuts and rates had come down, the Fed essentially in December came out and said, we're done. The things are not progressing in the manner that we expected. And so, the betting markets probably had 4 to 6 rate cuts, at least 5 or 6 rate cuts baked in for this year 6 months ago. Now it's 1 or 2 at best. And that's even looking more iffy. Although I guess if the market, if the economy really starts to take a dive from tariffs and things we've seen over the last couple of weeks, that story may reverse itself.
Then we have to make
we may see rate cuts again.
Right.
So it's a kind of that weird conundrum where the better the economy is, the less likely we're going to see rate cuts. If you start to see kind of some possible issues, which we are starting to see now. We're starting to see signs of some potential economic growth, the GDP slowing down a little bit. Certainly, over the last couple of weeks, the market's really taken a big hit with tariffs and what that looks like. Everybody's still trying to figure out what this means, right? How long is it going to last? What's the actual impact? Because it's not just you slap a 25% tariff on something. It doesn't mean the price necessarily goes up 25%. It may not. Or is it in a industry or sector where there's a lot of competition? Maybe the company's forced to eat the majority of that tariff and only pass on a little bit. If you kind of have a monopoly or very little competition, you can pass maybe all, the majority of that along to the consumer. So there's a lot to be waded through, but certainly in the interim, it's hurt the market. And of course the fund is absorbing that hit right now. And so for this fiscal year we're in, we're certainly sitting in negative territory for the year. But that's, again, that goes back to where we trust the investment policy over the long term.
Mm-hmm.
I'll stop there. Certainly, if you have more
Do you
questions.
have any more questions?
Well, I was reading the papers today about the real estate market. What's your forecast for?
Well,
Because
as of a couple months ago, it was actually very positive.
yeah, I know.
Certainly our real estate manager had, they felt like they had gone through the bottom. They'd hit the trough, the low spot. And I think over the next few years, their outlook was something more 6, 7, 8% type returns, that they'd weathered the worst of it. Now, I haven't talked to them in the last few weeks, so I don't know. I don't know if anything that's happening right now, I don't know if it'll hurt the real estate market or not. I think it has to hang around longer, because usually what you'll see in the real estate portfolio is a lag. So for instance, when COVID hit, everything got killed.
Yeah.
Well, real estate had a positive year because the write-downs and the impacts from that year didn't happen till the following year. Everything else rebounded the following year. Real estate was down for the following couple years, right? So I think it depends upon how long this lasts. If things work their way out over the next couple months, it may not end up impacting real estate at all, because again, it has time to play out. You don't have daily reporting, you don't have those type of things. You get quarterly valuations, and again, economic impacts take a little time to show their way into the real estate. So, long-winded answer, say I'm not 100% sure right now, but if the upset market is shorter term, it probably shouldn't have any real negative impact on the real estate portfolio.
It doesn't usually.
Thank you.
Agenda. Do we need to accept your report?
You don't. It's informational because it's whether you like it or not. It is what it is.
The returns are what they are.
Yeah. It'd be nice if we could only accept the good quarters.
I'm sorry. Update on the estate of deceased member due a return of contribution.
All right, I can take that. That's the Lyndon Bonner estate. And Stacy's, just to bring you up to speed, we had a former member who passed away, and there was an estate opened. His name was Lyndon Bonner, and he was due a refund of his contributions that were in the plan. And we had been going back and forth with his wife's attorney. She was the personal representative of the estate on working on getting the refund of contributions back to the estate. So I'm happy to report that we have everything in order and finalized. I want to thank Laura from Jeremy's office. She was a big help. There was a lot of forms that needed to get done. We had a lot of back and forth with Miss Bonner's attorney. They were great to work with. There was just a lot to do regarding the estate, showing that the estate's still open, everything, but it was a lot of work by both sides. But Laura was very helpful, like I said, and we have all the documents in order. I have an email from Tim Fisher, and we just need an authorization, a motion by the board to authorize the refund of contributions to the estate of Lyndon Bonner, and we can wrap that matter up.
Motion to authorize the contributions to the estate of Lyndon Bonner.
I second it.
All those in favor? Aye.
He was
Passes.
he was a former city manager. I don't know if you know that.
No, thank you, I did not.
yeah,
But I do have a question. One of the responsibilities of my CFO and Davey was we as a city had to confirm each year of those receiving money from our pensions, who was living, who was alive, or at least make a good faith attempt. Are we obligated to do that in any fashion?
We're doing that on your all's behalf.
The Are You Still Alive letters, basically.
So actually going back to a statement you made not too long ago in the meeting where you're talking about reducing your risk, that actually is what we're doing
great,
on your all's
great.
behalf. As trustees, you've hired us. We're taking the fiduciary responsibility for your investments, your day-to-day administration. Brent, of course, is handling all the
No, that's
legal work
great.
for you.
We-
So you have put your faith in us. So you can sit back a little bit and let us do the heavy lifting for you.
Okay. Does that mean you'll make that payment for us?
We are.
Yeah, from
Out
your
of fund.
from the plan's funds. Yeah, exactly.
We are going to write that check on.
Laura will send that. Yeah.
Yeah, be careful what you ask for, right? All right. Update on ad hoc COLA. Brett?
That was just going to be from the city attorney. If you remember, that's just a annual thing, and I think he was going to bring it to the commission as the request regarding the ad hoc COLA. So I don't have anything to update with that. I don't know if it was ever brought to the city commission to discuss, but that's just been on
I'm
the
not
agenda.
making that motion.
I don't think that we heard anything at the commission
Okay.
level.
Yeah.
So you didn't do it yet.
Okay.
All right, so next. Update on retiree member appointment. Have we gotten anywhere with?
No, I mean, on my side, I know Laura's worked tirelessly at this to try to find a fifth trustee. I certainly wouldn't be opposed to you all bring it to the city to maybe look into opening up the
We'll have trouble filling the
what's
seat.
available.
Changing the composition of the board, yeah, because we've ran through just about every
I
retiree.
actually might be a little reluctant to do that because I've always felt there needs to be a voice for the retiree at the same time.
This seat's been open for,
Well, let's do this, since we have.
But we can't change it. That's a
Yeah,
city.
since we have a new member who is our HR director, let her look at the list and see if she can do anything with it.
Right. Yeah, I would actually table it to another meeting.
Oh, yeah. I mean, I think Jeremy just,
Kick it down the road one more time.
I mean, look, we have 3 today, so that's good. And it's, so we're in better shape
That's
than we
my
have been.
other point. If we have quorum issues, that's one thing. We don't have quorum.
We did.
well, we have.
We had a lot of times with,
We're not going to have quorum issues now.
no, that'd be great. I mean, it's actually, we have in the past had lots of quorum issues, but it's been good lately, actually, since you got on the board, and it has been better, don't you think?
The last, I would
It's
say
the
the
chairman, you know.
Yeah, that's what I
I've been-
said, since you got on, it's,
Yeah, Jay.
probably the
Jay
last
shows up.
year, we've had some more active trustees who have showed up regularly and, yeah.
Greg was always here, and then, since, honestly, Jay, since you got on, it's,
Greg may help me find a good retiree.
I work with you, you know that.
and then I would just recommend if you find somebody, just check with Jeremy's office, because Laura's gone down the list.
Yeah, Laura can give you the list of exactly who's
Yeah.
can be
Yeah.
possibles.
I just think, though I'm just loath to remove that spot. The public's going to want that, people most affected
Understandable,
by the
yeah.
plan, we've closed the plan. I mean,
Yeah.
Yeah,
so
no,
had we not.
No,
closed
it's
that
better
deal
to have one on, absolutely, no question.
So,
for sure.
Yeah.
Yeah.
I'll go, all the hospitals, I'll go everywhere, I'll search.
I mean, we've had good efforts. We had one retiree who used to drive down from,
We had one, yeah, we did have one who tried it 2+ hours north.
yeah, he drove from he came to a couple meetings, I think Vero Beach, Port St. It was far, but he was committed, he was trying.
Tried 2 or 3 meetings.
Yeah, and then it was just
We'll provide all
the
reasonable
pay was too good. He
accommodations.
didn't want to make the drive,
The pay was too good.
Okay, reports. You have a report? You have a report?
No, just, I guess I'm up, sorry. Yeah, just obviously Stacy file Form 1 electronically, and then reminder to the rest of you.
Who will send me that form?
I believe your city clerk does. Or who do you guys get them
Still
from?
haven't received
From
it.
Andres.
You guys get them from the city clerk, right?
Yes, sir.
You'll file before July 1st. You have to file it within
I
30
should
days.
have
When does it have to be filed by?
You guys have to file it by July 1st. Stacy, you have to file it within 30 days of today.
Right, I should, yes,
Today, yeah.
yes.
But that'll take care of your July 1st filing
Right.
for the year as well. But let me just note, talking about who gets you the form, I don't know if you've had to do this recently, it's all online now. So there is no form. You've got
No,
to,
I had to do it old fashioned, say, here, Governor.
Yeah.
Yeah, no, mail it in, I
so
know.
now they only allow online.
Yeah.
So the clerk should set up, they have to give you an email address,
Yeah.
put it into
I
the
actually
system.
spoke to her as to why I hadn't gotten it yet. Yeah.
Okay.
Yeah.
Maybe she was waiting till the first meeting, but now 30 days from today,
So she'll have to put your email in the system, and you'll need to know which email she's done for you, and then you log in, and then
Then
you
I
fill it
can
out that
put
way.
next to my other 5, 25 forms, yeah.
Yeah, exactly.
Gotcha.
Trustees, you have anything you want to say?
No, sir, I'm good.
No, I think our role is to, do the best we can for our population. I think we did that today.
And welcome aboard.
Yep, welcomed.
All right, plan administrators, you have anything?
I just want to follow up. I know this was the first time using the new board agenda software. Want to make sure you all got the links, got the information. If you have any questions today, certainly let me know. Along the way, if you have thoughts, recommendations on how we can improve, tweak, we're happy to do it. This is new for us. We're very excited. But
No, this was
obviously,
great,
don't do it.
and it makes it easy for you to see, and I'll print the agenda.
Oh, yeah, very neat, very smooth, nice.
Okay.
very-
Yeah, it's nice. I like it.
But whoever doesn't attend, we will make a big deal about it.
I'm okay with that.
Okay, our next meeting is June 5th. Is there a motion to adjourn? There's no public, so
Motion to adjourn.
second?
I second as well.
Okay, all in favor? Aye. Thank you, guys. Thank you for being here.
Thank you.
And see you in June.
Great meeting.
I have a question. The payment, how are you going to bring it?
Brent,
Tell him. He knows.
Brent, they did confirm.
He hasn't,
So we're ready to, whenever we get to our
Okay.
cars,
All right.
what are we waiting for on the?
we'll hop on the phone.
Sounds good.
The 431.
Probably. Maybe wasn't aware. I would think.
So I'll notify our CFO.
Yeah,
Okay.
yeah. Give it to the new guy. He's newer than you.
No, he's not. He's been here much longer than me. I've just been, getting
No,
Tariq came before me.
really?
Yes.
All right.
I've been here now. Hold on.
And we didn't know that he came?
No comment. No, he's came from California, so
No, no.
California time. California
like
time. He's very good, but yeah, he came. So I'm here 40
Oh,
days. I'm here 40 days.
He and I